Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I definitely want to address these 3 points here, and then I've got a few extra things. I want to talk about gold potentially top in, look at a few charts as always. We've been talking on this channel pretty much day in, day out about this Dalai Lama pattern, right? And I was posting this and saying, look, we're probably going to get something akin to this and then we'll push off. Here's an updated look at that chart. It's not too far from reality, but I did leave out a key detail here, and that is, you've got to think about the sentiment as this happens. You get this flush, then it looks like it's going to recover, and then it rolls over again. And it's in this secondary rollover part that people go, oh, no, I think this thing's going to crash, or I think it's top, or that was just a dead cat bounce, that was just a lower high. They pile in short, we get the short stop losses get laddered on the way up. And then the completion of this pattern is to use those shorts to help fuel an upside push. So even though we showed this pattern that looks something like this, and even though, largely speaking, that is what has occurred for the price of Bitcoin, I can still see a lot of people have been caught out by the sentiment shift in here. A lot of people have gotten really bearish in my comment section. A lot of people are saying like, oh, it's invalidated. But just keep in mind, there's a very clear invalidation. There always has been. It's the low. The wick should not be violated. Everything above that is no man's land. Start to get a breakout above the range highs, and I think we can say it's on like Donkey Kong, and start to break down below the prior wick, the initial wick of this Greek letter pattern, and we can invalidate the whole thing and say that's not what it was. But everything in the meantime is no man's land. So please just go and touch grass, relax, enjoy yourself, right? Let the market do what it's going to do. And then when we've got an answer, when we've either got a range break or we've got a new low, then we can talk about what we're going to do going forward. For now, all of this is no man's land. So don't get soured by the price action. Don't start making premature judgments, because it is indeed premature to make any judgments here. The next thing I want to talk about is TLT. I see a lot of people talking about, did we miss TLT? Is TLT breaking out? I've had this yellow squiggle here, and as you can see, the yellow squiggle at the moment is not really correct. So I wanted to share with you the way I view this whole setup, the way I view my approach to markets and my approach to making these trades. In no particular order. Number one, if I draw a yellow squiggle saying that we're going to do this and the price does what it has, which is the opposite, then I have to accept I was wrong in my expectation. Now, it doesn't mean it can't happen a bit later in life. It doesn't mean it won't happen any day now. And it might happen here, right? We might have to adjust this yellow squiggle so it does this for a while and then we get it. But at least for now, it clearly didn't do what I wanted it to do. So then I am forced to accept that the market is not going according to my expectations, right? My expectations were wrong. I got this setup wrong, at least so far. And therefore, if I'm wrong in my expectations, if this setup is wrong, do I want to act and start risking my capital when quite clearly I don't have a good read over the market? You see what I'm saying? I'm not coming at this from a place of, oh, did I miss the trade? All right, first of all, that's a nonsensical thing to say, because we're only about 8 points off the low or 7 points off the low. So there's no way we missed the trade. But I can't in good confidence say, oh, there's my high quality setup inside of my system, right, which I normally structure my trades around. I can't say that because it just doesn't look anything like my high quality, high probability setup in which I can structure my trade around. It doesn't look like that. It looks like right now I was wrong. It looks like I was flat wrong on my expectation. So I'm definitely not going to go allocating capital and risking capital until I know what's going on here. Now, it might occur all in the next few days. We might just suddenly get a big weekly cycle flush. And then I might be able to say, okay, there it is. Okay, that makes perfect sense. That's what we thought would happen. In which case, fine, then we'll buy it. It also might take a whole nother weekly cycle. Like I said, a bit more range in and chop in here. It might even have to go all the way up to 100 and then crash down. In which case I can say, fine, there's my weekly cycle low. There's my real setup. Okay, the setup that we always use to structure my trade around, and then we'll buy it. But I can't with any degree of confidence say, let's draw a yellow squiggle. The market does the complete opposite thing, showing me that I am wrong, right? I got this expectation wrong so far, and then say, well, it doesn't matter that I'm wrong, we'll just buy it anyway, right? What are you talking about? Another point I wanted to make here is I see a lot of people going, can we buy TLT? Did we miss the trade? Blah, blah. Look, you don't need my permission to buy it. If you think the market is bottomed, if you're comfortable with the risk here, buy TLT. You don't need me to hold your hand. I might not even buy this, okay? That brings me on to my next point. Did we miss it? I have missed trades and pumps every single day of my life, and I will continue to miss trades every single day of my life, okay? It's not a real problem. That does not exist. Missing out or fear of missing out is for traders that do not make any money in markets. That's not an emotion I ever experience. I never miss out on anything because I know, objectively speaking, I miss out on things every single day of the week. To show you how silly this way of thinking is, I always use this ridiculous example of there being a bond in Afghanistan right now that offers a 1,000% yield. Okay, we're all missing out on 1,000% Afghanistani bond right now. Okay, do you feel bad about that? No, of course not. Right? What are we doing here? You must change the way you think as a trader, or you're just permanently going to be on the wrong side. Worst case scenario, I did fully miss this. Okay, it goes up in a straight line from here to 200, and I don't take part in any of it. Is that a real problem? No. It's not. I don't care. I'll find something else to trade, right? I've got dozens of trades open at the moment. They all look like that, frankly. Straight up, fourth angles. I don't need another one, right? There will be plenty more opportunity in the future to get hold of another trade. There's no missing out. Missing out on what? And again, if you think the market's bottomed, if you can't possibly stomach seeing this thing move higher and you not being on board, buy it. Buy it, put a stop loss below the lows, risk 10 points at the most, 11 points to make potentially 100. Okay, that's a 10 to 1 R&R. What's your problem? Change the way you think about markets. Anyway, I'm going to keep doing me, okay? I'm going to keep my word. If I see a high probability, high quality setup for me to structure a trade around and keep my risk managed, I will let you know in real time. I will buy it publicly with a public stop loss level, as I always do. I will notify level 3 members in real time. For TOT, if I buy it inside of the JISA, I will make a JISA video update as promised. It's not like I'm just suddenly not going to hold up to my word anymore. Right? It's not like I'm just suddenly going to start operating like some shady character doesn't do all this in front of everyone in plain sight. Okay, that's not how we do it here. We're going to keep doing us. We're going to keep doing what we always do here. No changes. But I can't in good faith draw a yellow squiggle, watch the market go 180 degrees in the opposite direction and then say, oh, well, we'll just buy it anyway. Like, what are you talking about, bruv? The next thing I wanted to talk about was QT ending. There's this clip here from Powell. I'm not going to play it because it's 2 minutes and frankly, it doesn't really say anything apart from the fact that they're looking to halt quantitative tightening, right? They're looking to stop running off the balance sheet, which of course is akin to QE at the margin, and therefore the market's jumping up and down at the moment and saying things like no more cycles or no more 4-year cycles or extended cycles or whatever the narrative is. But to draw a few scribbles here, right, say this here is a cycle low, okay, and we're talking about a stock or a share at this point. So we're on our way down to a cycle low, we get to about here, and then they get earnings release, okay? If that earnings release occurs when the cycle has yet to bottom, then it doesn't matter how bad, how on target, or how good this earnings report is. Every single possible metric could be surpassed to the upside. And if the cycle hasn't bottomed, okay, this stock or share will continue to trade down. Only when the cycle has bottomed can it then reverse and go on and do what it's going to do. Earnings do not matter because guess what? Cycles are in control and everything else is narrative. Similarly, if the cycle has already bottomed like this and then earnings come out, again, it does not matter if the earnings are in line above expectations or they miss by every conceivable metric possible. It doesn't matter because the cycle has bottomed. If the cycle has bottomed, then irrespective of what the earnings report says for this stock, we will see the market move higher because cycles are in control and everything else is narrative. Now, you can either accept this or not, but what we can't do is pick and choose when it suits us. So now we're going to apply this exact same logic, but to QT. If the cycle has bottomed and then we get narrative such as QT is ending, we will indeed see the market interpret this as bullish. We will see the market use this narrative to explain away upside price action, and we will get upside price action. However, if the cycle is yet to bottom, okay, the cycles are down for the foreseeable future, then QT ending is not going to suddenly abort this cycle and see us just start rallying up for no reason. I know retail think that. I know a lot of big accounts online. I know a lot of like respectable traders think that's how it works, but that's not how it works, okay? The cycles are either in control or they're not. And right now, what do we know to be objectively true? They are looking to end QT. Yes, fine. That should in theory be bullish. But what else do we know to be objectively true? The cycles are not bottomed. They're absolutely not bottomed. They are late. So therefore, the QT is not going to be bullish this time around. The QT is going to be perceived as a bullish narrative, but the cycle is going to still have to bottom before the upside can occur. So now when we pull up any of these charts, look at the S&P 500 first, the cycle is down now. We can still go up for a few more weeks, but we're not just going to cease to respect this cycle at all, okay? The market is going to do what it always does, which is cycles are in control, everything else is narrative. So these cycles need to bottom first before any of this kind of QT halting or QE at the margin or interest rates getting slashed to zero or printer is coming. None of that can be useful as a narrative to catalyze upside until the cycle has bottomed. The same is true of gold, right? It's got this half cycle low here. So yes, it can go higher for a little longer, but at some point it's going to have to top and head for the cycle low because guess what? The cycle's not bottomed yet. So it doesn't matter what the narrative is, doesn't matter how much they slash interest rates or halt QT or how bullish historically that normally is, because guess what? The cycles are in control and the cycle's not bottomed yet. So we can't have this interpreted as truly bullish and see massive upside price action until such time as the cycle is bottomed. And I could repeat myself in my entirety with Bitcoin. Doesn't matter how bullish sounding the narrative is, and doesn't matter how high we go in the next few weeks, this cycle is due to top soon, and then it has to head for a cycle low. And until such time as the cycle is bottomed, none of this news can be actually interpreted as bullish because the cycles are in control and everything else is narrative. Now, I can flip this 180 degrees to illustrate my point the other way. This entire bull run happened on quantitative tightening. The entirety of this happened against QT and overly restrictive interest rate policy. So how does that make any sense? Shouldn't quantitative tightening be really, really, really difficult to see such massive performance occur in? Well, of course it should. However, the cycles are in control, right? This cycle bottomed back here at the end of 2022, and thus it doesn't matter what the narrative is, because we'll just use any old narrative to explain away the upside price action, because again, it is just that. It's any old narrative. It doesn't carry any weight. None of it means anything, okay? What matters is the cycles. Once the cycles bottom, the path of least resistance is up, and at the moment, we're in the neighborhood to see the cycle top, and thus the path of least resistance is soon to be down, and it doesn't matter how much stimulus you throw at the economy, it's not going to have the impact that the majority of market participants think, because the cycles need to bottom first. Remember this old classic chart where you've got global liquidity in the cycles? Well, what about right here? Liquidity was increasing the entire time through the GFC. And what happened to the stock market? It fell. Why? Because the cycles hadn't bottomed yet. So yes, this all sounds extremely bullish, but my entire feed is plastered with people saying, well, that's it. No more 4-year cycle, up only forever, no more bear market or whatever. But understand this, okay? Either cycles are in control, everything else is narrative, or that's total BS. It's total hogwash. But we do not get to pick and choose when it suits us. We can't say half the time cycles are in control, everything else is narrative, and then when it suits us, yeah, but quantitative tightening, stopping that's different, Camel. Like, it's different. That's a different thing. No, that's not how it works. So be very, very, very careful here, because for a long time on the weekend's deep dives, I've been talking about how investors would be looking over the hill at this part of the cycle, right? They would be saying things like interest rate cuts are bullish, interest rate cuts are coming, liquidity is going to ease, we've just beat a bunch of earnings, things don't look so bad. And I was saying that is what is going to convince people we are in the middle of a soft landing. And this halting of quantitative tightening, whilst it sounds extremely bullish, just gets bundled in with all that other stuff. Okay, it's just more narrative for the average market participant to be wrong-footed about these tops that are soon to show up. And I know a lot of people haven't been here during this 4-year cycle low, okay, or a lot of people didn't really understand cycles back here. But back here, nobody wanted to buy the 4-year cycle lows, and everyone was record bearish, record one-sided in the stock market at the 4-year cycle lows, for the simple reason all of this was occurring on overly restrictive monetary policy, right? On the opposite of QE and balance sheet expansion, people were convinced we were only halfway down at this point. And they were married to the narratives. They were married to the fact that the monetary policy was overly restrictive and they weren't even close to considering reversing QT yet and all of this kind of thing. And that's what led this to be the most angriest, most hated, most doubted, most shorted rally in history. So don't say this time is different, or this is not going to apply to quantitative tightening at the hard right edge, because we just saw the exact same stuff back here. Okay, I'm not trying to convince you of anything. You do not have to listen to a word I'm saying, right? I'm just presenting my case and doing what I always do. But I'm seeing all of this, and I'm seeing people start to champion the idea, right, that this is a game changer when it simply isn't. It just simply is not, okay? The cycles need to bottom before anything like this can actually manifest as bullish. For the last bit of today's episode, people are apparently queuing up to buy physical gold. This is super, super, super blow off top vibes. On this channel, that's not a surprise to anyone, right? We know we're getting ready to take profit on all of these metals and minor positions. We've been banging on about that for ages. We just keep riding the angles until they eventually break down. And so far they haven't broken down, right? So no real changes to that. But I am seeing an awful lot of people point out that the Bitcoin to gold ratio is looking pretty bearish here, isn't it? If you put the Bitcoin to silver chart up, it's already in a bear market. It's like broken all the structure and it looks like it's fully in a bear market for silver. And then Bitcoin priced in gold does not look good, does it? As Brett points out here, big head and shoulders top potentially, never really able to clear the range highs from back here. It's really not a good look if we're being completely honest. And it's kind of like karma in a way, because the Bitcoiners, many Bitcoiners and crypto kiddies clowned and dunked on the precious metals for years, right? They kept calling it boomer rock. They kept saying that it had no place, or that Bitcoin was going to demonetize gold. And now they're kind of getting their comeuppance to a certain degree, right? Now you're kind of being forced to accept that you should have had both in your portfolio all along. But I will say this should be close to a weekly cycle low, as this was, right? These are pretty equidistant, as you can see. So I think we've got a good chance here at a reversal. And if that's true, with normies out in the wild queuing to buy physical gold after the chart has done this, okay, and is getting ready to break down from a fourth angle, then when we come back here, I think we could actually see this head and shoulders top fail. and failed head and shoulders are normally extremely bullish to the upside. So maybe what we get here is another squeeze, a pretty violent correction back to, I don't know, 3 or 4K perhaps, which would immediately send this ratio back to here, assuming Bitcoin doesn't move. And then of course, if Bitcoin can just break out, then we could actually still target that very long-term target of 65 for the ratio. I think 100, which was the maximum upside I had, is probably off the table now, to be completely honest. I think we've just used up too much time with the 4-year cycle. I don't think there's enough time left to get Bitcoin to gold ratio to 100. And also, when I was talking about potentially hitting 100, I wasn't really expecting gold to be as high as it is right now. I knew gold would do well. I thought maybe we could get to 3K. But I mean, the fact that we're smashing through 4K right now, it has even exceeded my expectations for this current move. So I think we have to be honest and say that 100 ounces is probably not coming, right? I think that's just almost certain at this point. But I do still think 65 could be on the table if gold can top soon and crash back to about 3,000 or 3,300. Okay, back to this kind of level here, I think would make a lot of sense at about 3,300 bucks. And if it can do that whilst Bitcoin completes its power law, which would be up to 220k by the end of the year, then I do think we could probably get somewhere in the neighborhood of this kind of 65 range for the Bitcoin to gold ratio. This chart right here shows once gold in blue bottoms here, okay, and starts to push up higher, you'll notice that 91 days later in this occasion, Bitcoin does the same thing, okay? Then gold, where my cursor is in blue, bottoms and starts to move higher, okay? And 70 days later, Bitcoin also starts to move higher. Then here, gold, the line chart in blue, bottoms here and goes on a big rally to the upside. And Bitcoin, just 91 days later this time, puts in a significant low and starts to play catch up. Then we see the same thing here. Here's gold, the blue line chart where my cursor is. It puts in a low on the line chart and goes on a rip. This time, 98 days later, Bitcoin puts in a major low and then goes on a catch-up rally. And now at the hard right edge, we've got gold putting in a major low and going on a run. And so far, it's been about 63 days for Bitcoin. So sometime in the next month, it should be time for Bitcoin to start ripping. Now, I was not really expecting to see 30 more days of sideways, to be completely honest with you. So that kind of makes me think that we're going to get this done sooner than 90 days. This one right here was 70 days. So that to me would fit better if we just spend another roughly week going sideways and then start to moon. But unless this time is different, there should still be another move to the upside ahead for Bitcoin. And I know sentiment's really bad, but hear me out. Back here, after this big move, right, we'd had this big parabolic move for gold, right? And then we got here and it started going sideways. And all through here, lots of people were saying, no, you're wrong, Camel. You're wrong about calling for bullish upside. You're wrong about more room to rally for the precious metals. They're like, it's had this big move. It's making a triple top or a quadruple top or a pentuple top or whatever it was. And it's going to roll over, right? Sentiment here was very, very bearish. Lots of people wanted to call the top. But the reason I was so confident in saying I don't think that's going to happen, I think there's going to be a big breakout rally ahead here, is because during this consolidation for gold and for silver during this time, we were able to look at the miners, okay? And the miners were ripping to the upside. They were mooning the whole time. They spent half the time consolidating, maybe even less than half, and then they started to break out and lead early. So note the dates here, okay? Gold put in its top April 2025, and it doesn't start to truly break out and emerge until really September, okay? When it's September it gets going. So once again, April for the top, September for the breakout. But when we go to these mining stocks, here's April for the top for the miners, okay? We get a quick pullback, and then look, it just goes. Where's September? Here, where my cursor is, okay? So all the while gold is consolidating in that cycle, the miners just didn't give a single iota. They just mooned to the upside. And I kept making content all throughout that gold consolidation here and saying, I don't believe the top callers are right. I'm still very bullish. And I think the miners are leading. I was saying the miners are leading to the upside here, and they wouldn't be doing that unless they knew, or rather the institutions knew, that gold and silver were about to break out. And then sure as hell, we get to here and off we go. And so why is that important? Because I am now making the exact same case for Bitcoin and the crypto stocks. Bitcoin is stuck in this consolidation range. Lots of people are trying to call tops here. Lots of people are trying to say this is distribution, even though the volume profile doesn't match for Wyckoff distribution. Lots of people are getting very bearish here. Lots of people are getting impatient. Lots of people are acting like spoiled children that feel like the market owes them something when in fact it does not. And at the same time as Bitcoin is in this consolidation and this range and not really doing a whole heap of anything, many of these crypto mining stocks are mooning, okay? Here's Iran, mooning. Here's Wolf, mooning. Here's Hut, mooning, okay? Here's Bitfarms, mooning. I believe these are leading Bitcoin higher, just like we saw with the miners leading gold higher. And notice again, back here, right, everyone was sleeping on the miners. It was only really the level 3 members section that was actually really aware of what was going on. And it's kind of the same deal on the crypto stocks. Most of the market has been asleep. I know there's like Big Mike, who's done extremely well with the miners. I know there's a few other online personas that have done extremely well with the crypto stocks, but most people were in altcoins and they were sleeping on these types of huge gains occurring in the likes of, if I turn this on, right, like in the level 3 members section, we've been cooking with peanut oil the entire time, right? Same for Bit Farms. This is what people wanted from their altcoins, and they just didn't realize they could get it from the stocks without having to actually take much risk. But again, I point at this for the simple reason that just like the gold miners were leading gold higher whilst gold consolidated and everyone got bearish on it, I believe that's exactly what's happening here. I believe these stocks are leading Bitcoin higher, and thus Bitcoin still does have one final leg left in it, even if it has to chop around here for a little while longer. I left my note here, an open tab to go to the power law, find a power law chart, which remember, the power law still predicts that we'll be at around 200k by the 3rd of January 2026, right? So by the end of the year, we ought to be at 200k if this power law continues to play out. I know we're stuck in this range, but again, those crypto stocks are leading. I know gold is locking people out, but again, this thing should be ready to break down soon. And the stock market just keeps on keeping on, doesn't it? Hopefully we can get 2 drives here, and that will give us another opportunity to add. If this thing's just going to continue to rip, then who am I to argue with that? And for those of you that want that TLT trade, stay tuned, okay? It is coming. Just let me cook. I'm your boy Camel. If you're a level 3 member, look out for the midweek update I'm going to do for you guys this morning. And other than that, see you all soon. All the best from me. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a